CrossSwap has gone up over 300% just from 2 days ago. So you should be in profit. But what do you do now? I'm listening to you. Do you buy more? Do you sell? What do you do? The emotions are taking over. So today we're going to cover a business plan based on logic. You can move away, bench the emotions, and we can act in a business-like fashion. Not only does it apply to CrossSwap, but it applies to every single cryptocurrency. So if you like today's video, like, subscribe, hit the bell notification. I appreciate you. We've just hit 5,000 subscribers. Can you believe on April 19th, we were on 5? Literally, we just started on April 19th. We had 5 subscribers. Now we have 5,000. What's that? That's a thousand. That's 1,000x. That's 1,000x. If you don't know me by now, my name is Chigi. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity: How to Invest Like a Pro. Been featured in the best-selling book High Probability Trading Strategies back in 2008. Normally focused on currencies, now exclusively on crypto. So let's dive straight in. So you can see today, this is CoinGecko. Let's just press refresh. This is at 9:30 a.m., 21st of October. Is around 58 cents. When we did our first video, it was around 15 cents, around 3x up. The market cap was around just under 3 million when we first did the video, and now it's just under 12 million. So it's been really, really great to see with CrossSwap. But it's a $1 billion project. It's got a $1 billion valuation written all over it, right? They haven't even launched version 1 of their DEX yet, and it's going to be competing with PancakeSwap. It's not going to be competing directly. It's in its niche, but then as it evolves, it's got, I think, 100 million, I think is very highly probable, a billion. But what I want to look at now is short-term, medium-term, long-term, in a really logical, non-emotional, business-like fashion, because this is where most people lose. In 2017, it was shown with on-chain data that around, I think it was 80 to 90% of individuals, retail investors that made a lot of gains, held on to those gains, and they gave it all back to the market as the bear market hit at the end of 2017, early 2018, and for the following 2 years. And a lot of people sold near the bottom of the market, right? So you need to have a business plan, business plan so you can be objective and non-emotional. I listen to, your comments on YouTube, in the Telegram groups, my private Telegram group. I just hear it all the time, and I'm like, okay, we need to get some training in place. So today we're going to cover a few things. First, let's look at the metrics on the charts. What is the price action telling us? Now, if you haven't already, take my free Elliott Wave and Fibonacci masterclass. It's in the link below. As a bonus, you'll be able to buy one of my courses. They're going at, I think it's like 85% discount at the moment. But you get invited to my private Telegram group where you'll get premier access to this kind of content and all my content, whether it's a day or even 3 hours. But what it teaches you is how psychology plays out time and time again. Buying behavior, profit-taking behavior, panic buying behavior. When we see that as a mass herd, whether it's a small micro cap, 10 million market cap project like CrossSwap is right now, or it's Bitcoin with $1 trillion market cap hitting all-time new highs, the psychology plays out more often than not. And the pattern on CrossSwap right now is becoming relatively clear. So we can look at it in a very objective manner. So I'm going to zoom out. If I just zoom out, we can see, obviously we've had a trend reversal, right? CrossSwap, I've got the closing bar data. It just reduces the noise. The noise, what I mean by if you have candles open, you'll see that there's wide wicks, meaning, there's a wide wick, and there was a wide wick over here. It's not too bad, but it just seems a bit easier to see when we use closing bar data. So this is on an hourly chart, just so we can see the pattern. So clearly, we did the IDO, peaked over here. I think it was 46 cents, give or take. Sideways to down, vesting schedule, people selling their tokens, hit down here. And then it's done this trend reversal, a nice trend reversal. It's an overbalance of price. This is obviously the biggest move that we've seen to the upside, in recent times, right? Recent times. So we want to look at that. But what I want to show you now is whether you love the project, hate the project, love Bluezilla, the incubating team, or you hate them, whatever, right? We just look at psychology now. Let's just forget this is CrossSwap for a second. And we're just going to zoom in over here, right? Because at the end of the day, this is your money, and you got to protect it. Warren Buffett, you've heard me quote him. Rule number 1, never lose money. Rule number 2, Don't forget rule number one, right? Yeah, you've heard me quote that. It's in my book, right? So what we're going to look at here, I wanted to, if you're not familiar with my Elliott Wave, it might be worthwhile pausing this, take my masterclass in the link below, because it explains this in a bit more depth, right? But I'm gonna assume you've done the masterclass, right? And if you haven't, it's just your job to kind of get upskilled. But normally markets move in an impulsive 5-wave sequence, and that's what I'm seeing here, a 5-wave sequence. Wave threes tend to be the most impulsive. Look at the angle. Look at the angle of the wave three, right? The angle is it's almost directly up, and then the wave five is not as steep, right? And that shows you there's a decrease in buying like power, so to speak, right? Oh, by the way, what we're going to do at the end, I'm going to show you a spreadsheet where I'm going to give you metrics and numbers, and I'll make it available in my private Telegram group where you can look at the staking rewards. Geez, the staking rewards, I thought 508% was crazy. It jumped up yesterday to 670% because I believe it's CrossSwap charges a 5% sales tax, and the majority, if not all of it, goes to the stakers. And it's just I couldn't believe it. 220% on day one was amazing. Then it was 508, and I was like, okay, I'm expecting it now to drop the next day, and it went up. Lynn, I think he was the first one to post it in my private Telegram, and I was like, I had to double check it. I was like, wow. And we want to look at that because that has to come into the business plan. It's very, very important. So look, what normally happens, I'll give you a quick lesson just in case you don't take the masterclass. Markets tend to move in a 5-wave impulsive sequence. And we've got this wave three. The white line that you see is the previous all-time high, which is a key resistance zone over here, previous all-time high, right? And we can see the market struggled a little bit to get past that. It had a bit of a correction, and what we're calling a wave four. And then we had this, or we are on this wave five, right? So now what we're going to use is Fibonacci. Fibonacci is a beautiful tool because it measures psychology. It measures psychology. And a typical wave five high, we're in the probability game here, guys, not certainties. And you want to get as close to risk-free as you can at a time that suits you. But if you can kind of paint the picture of what's likely to happen, and then you can judge your personal business plan, and every single token that you own should have an independent business plan with different metrics because there's different numbers. There's different staking rewards. There's different chart patterns. There's different tokenomics. The roadmap is different, and so on and so forth. Your personality is different to another individual. So what we're going to do is we're going to measure wave one to wave three. Again, I cover this in the masterclass in terms of the details. But a typical wave five high is between 62% and 100%, right? 100% tends to be the maximum. It's not that it won't overextend over 100%, but more often than not, 100% is more common. The more often than not, you'll see that. So what we've got here is that the price has hit this 100% in that zone. You can see it there. If we use candles, we can see it's probably spiked above or thereabouts. Yeah, it's pretty much just tagged 65 cents, and now it's moved down. We can see right now it's live data as of 9:40, but I don't want you to panic. You have to watch the whole video. Don't panic. You need to get more mature in your skill set. This is probably going to be the beginning of a correction because it's looking, it's definitely the biggest move on this downside. So it's either going to be a wave four or the beginning of a correction. So what I want to do is paint a picture for you of what likely occurs, right? In fact, I'm going to do this for you. Let me do this because I want to give you peace of mind early because some people panic too soon, right? I see all the time. Depends on skill level, right? And experience, right? So even if the market does do a bit of a correction and you go, what? Correction? What tends to happen after a healthy correction is a continuation, right? Just as we saw with this correction, each one had a continuation, and then the cycle just repeats on a bigger scale. That's what we're looking for. That's absolutely what we're looking for. So I'm trying to show you this is what we're looking for, right? This is what we anticipate. Because keeping in mind, they haven't released version 1 of the DEX yet, right? When they do, I don't know the date. If you know the date, let me know. But it's on Q. It's supposed to be for Q4, which is anytime now, any week now. So what I want to show you is this. What is a typical correction, right? Let's just get rid of this. Let's just assume that we've obviously passed this one. Let's just assume this is a wave 5 high, right? I've got the wave 5 here. Let me just make this a bit bigger as the primary count. We can change it here as a primary count, and let's just change it to white so it's nice and clear. Yeah, hopefully you can see that. Yeah, 1, 2, 3, 4, 5. That's what the wave count is. Doesn't mean it's gonna top out over here, but it's highly likely. And you can see it's starting to move down already. But what I want you to notice is, very quickly, I'm going to jump back into this in a second, is the current APY is 670%, right? That's insane. I'm going to go into this in a bit more detail in a second. I'm probably not going to be able to keep it short and sweet, but I was going to try and keep it short and sweet. 670%. I'm just playing with the spreadsheet, but I'm going to go over it in a second. But 670%, I've got it actually here. Let me do it down here. 670%. Let's just delete this stuff. Sorry, I've been playing with this spreadsheet this morning. But what I wanted to show you was number of tokens is here, but it's around, if the price stays give or take the same, it's the equivalent of 110% a month, right? It's double your tokens in a month, right? More than double your tokens in a month with that. And if it stays that kind of levels, it's not guaranteed that it will because it changes daily. But if it is, that's double your tokens. So you need to factor that in to your equation with your business plan, because that's going to account to your P&L, your profit and loss. You need to account for that. Very, very important, because people are going to miss it. But if you account for it, it gives you a bit of a buffer and a bit of a hedge. And if the price goes up to like 50 cents by the time you sell, in hindsight, it works out more. That's, I just want to kind of, I don't want to confuse you because most people don't like math. Sometimes I get a bit carried away with my math. So let's just focus on this. This is what I want to show you. One of the main things I want to show you today. Over here, let's keep it a line chart. All right. So typically, when you have a correction, a typical correction, a healthy correction, a healthy profit-taking correction, believe it or not, on the first pullback, when there's a first impulsive wave, this is a first 1, 2, 3, 4, 5 of a wave 1. First impulsive wave, what is the likely correction, a common correction? Well, we can measure it. We can measure the psychology and the expectation. The minimum tends to be, I'm going to draw it for you. This, by the way, is DEX tools. When there's coins that are not listed on centralized exchanges, I find DEX tools works for me very, very well. The typical minimum is 50%, 62, and a maximum of 78.6. And then the typical time taken for this correction, this is a psychology. We're totally independent of the project. People go, yeah, but this, but that. I go, look, I don't care. Psychology is psychology, and it plays out more often than not. So we just have to go with the probabilities. So we're likely to see a retracement at some point into this zone, right? Is it guaranteed? No. Is it likely? Yes. What's the date? Would it give me the date? Sometimes the thing doesn't give me the date. Sometimes I have to reset the chart. Let me just see if this does it for me. Sometimes it's annoying. Let me change the time frame. No, I have to, maybe if I do on a daily chart. Let me just try this. Okay, it gives me the date here. This says I'm short-sighted, is 23rd. 23rd. So next 2 days. So it's not a big time frame because, keeping in mind, taking everything into perspective, it's only been a few days, right? So don't get carried away. We want to look at the longer plan. We want to look at the next 3 months, right? But don't panic about this. This is what I'm trying to get across. If you bought down here, somewhere in this region, even down here somewhere, it's okay to become risk-free or take some profit this wave. You don't have to exit everything, but exit 10%, 20%, 30%, 40%, 50%. Whether you love the program or not, it's just good business practice. Rule number 1, never lose money. Rule number 2, don't forget rule number 1, because you always want to work on the worst case scenario. So what's likely to occur is some type of and there's going to be people that kind of go, I missed CrossSwap. Now the price is 40 cents again. I want to buy. And then this. And then there's other people that says, I missed the selling opportunity up here. I want to now sell. So this is the psychology that tends to play out. ABC correction, right? But then I want to make sure you know what's most common, typical, highly probable, not guaranteed, is the next price wave tends to be, I'm going to measure it for you. We can measure this. We can actually measure psychology. How crazy is that? That's why I love Elliott Wave and Fibonacci. And if you haven't already, I'm gonna be like a broken record. Take my free Ellie Wave and Fibonacci masterclass as a bonus. If you buy one of my courses, you'll get premier access to this content. Premier access, because I know timing is everything, right? Timing is everything. So let's now just drive this here. Bump bump. I want to try and keep this. I'll try and wrap up in 5 minutes. I know some of you were saying, yeah, get your videos shorter. And I go, I try, people, I try, but sometimes it's difficult. Right. So the next price action, these may look like random lines, but wave 3 typically goes to 1.618 of this wave 1. If it corrects this way, we're kind of projecting and forecasting here. But more often than not, like this initial wave down here, it overextended. So especially if they launch their decks, it may overextend. And so these price targets here are, what is this, $1.17 to $1.70, right? You go, seriously, Jagir? And I go, man, it's 11 million market cap. This is $1 billion project on the cards over here. So it's like this. So what I'm trying to get across to you is there's no right or wrong. You just have to make a decision. Should I buy more? Should I buy less? You just have to write it out and do the numbers. But last thing I want to finish on today, hopefully this was helpful. How did you find this? Because sometimes it's difficult, right? When the emotions run wild, fear of missing out, fear, uncertainty, and doubt, fear of greed, fear and greed, it just it's illogical behavior that starts to occur. So what I want to do is I was just putting the spreadsheet together. I haven't finished the spreadsheet. I just want to try and get some numbers clear. So what I'm going to do here for you is, all right, hopefully skip this part if you don't like numbers, but it's very important. It's very important. So what this green part here does for us, right? This green bar down here is just going to say, I'll do a cleaner version of this, but this was just, I just wanted to get the raw numbers. We're just saying, right, we're going to buy 10,000 tokens, right? Let's say that you bought 10,000 tokens and you got it for the price of 25 cents, right? 25 cents up here. If I can draw, let me just get this up. Can I do this? Does this work for me? Spotlight. I can use a spotlight. Does this work? Yeah, here we go. We paid 25 cents per token. We bought 10,000 tokens, which is based on this number down here. We've paid $2,500. The current APY, based on what we saw here, is 670%. So we just put that data in, keeping it very objective. The daily rewards, based on these numbers, is 184 new tokens. And that works out to be on a 30-day month, 5,507 tokens. So what I want to try and get the concept across, because you're going to have different options and choices to make. And there's no right or wrong, there's just a decision. Because no one knows exactly what's going to happen in the future. But you can kind of project with high probability. Let's just say in month 1, you say, okay, I've got an extra 5,507 rewards. That's like 55% extra tokens, right? Based on this. It could go higher, could go lower because the daily APY changes. But let's just say you go, okay, because you're going to have an option to withdraw them and sell them on the open market, on the secondary market, on PancakeSwap, or to stake them and get more rewards and have a compound effect. So let's just say for the first 5 months, you decide to compound because you want to buy and hold as a hedge. So you're increasing your position size. So all you're doing here is you're going to add 5,007 tokens into month 1, but this is going to add and increase the number of tokens that you've got. And you'll see the next month of month 2, your rewards are now going to increase because you've got more tokens. I'm assuming we're making the assumption that it's going to be on average 670%. Could be higher, could be lower. I don't know. But I'm just kind of getting the concept across to you. So now we say, okay, in month 2, we're going to take those rewards out, withdraw at the end of the month. You can do it daily, but you can withdraw at the end of the month, put them back in to your staking account, and then you get to get rewarded by them because this is helping the company, the CrossSwap team. Their tokenomics, they want you to hold. They want you to stake. They want to incentivize you for doing that. Then you can see, right, your total tokens now is 24,000 because you've been staking, getting rewards, adding it to your, just think of it as your cross wallet bank account, and you're just adding and you're getting interest on that amount. And then you got 13,000 next month. So I'm just going to keep repeating this for 5 months. Let's just say it works out this way. And then the next month you get 20,000. That's like your double your original purchase amount. 20,534, 534. Hopefully this is making sense. I know sometimes doing numbers, I know these numbers might be tiny as well because I'll zoom in it as well. But yeah, just let me know how you're finding this. But last month, month 5, let's just say you're looking to now withdraw month 5. Let's just see where you stand in month 5. 842, 842, bang. So that means at the end of month 5, based on these, we're making a few assumptions, you will now have 89,664 tokens, right? I'm going to just zoom in here, zoom, zoom. Right, just as we'll just do it like this so you can see these numbers. Hopefully these numbers are relatively clear. So these are your tokens. This is your purchased amount. These are your rewards, and you restake them. Excuse me. And now your total rewards, so your total bank account, your CrossSwap token bank account, so to speak, is 89,000 tokens. So what we're going to finish on here, because I want you to put this into your business plan, right? Is let's just say the token price 5 months down the line goes to, well, let's just say we're anticipating the end of the bull run at, I don't know, February, and the token price, well, you can just type it in here. Let's just say it goes to $2. It now means your initial $2,500 investment, right, which we saw at the beginning, which was up here, $2,500 investment up here, is now worth, if I can find it, 179,000. That's a 7,173% return. That's a 70x, right? With only the price going to $2. Well, you might say, well, what if the price just stayed at the purchase price of 0.25? Well, you still make an 8 or 9x, right? Just based on the accumulation of your rewards. Well, what if the price goes to today's price, or the all-time high of 65 cents? Then it's the equivalent of a 23x, which is 2,300%, which is 50 grand. 2.5 grand into 50 grand, 60 grand. What do I anticipate? A 10x was $1.50 from when we first did the video. So $1.50, that's 53x. If you do, you just plug in the numbers, you can kind of, speculate over here. But we can even say, I know we did, I think we said $45 the other day. Oh, let's just say $35. $35. Which will hit our $1 billion market cap, I think it was. Numbers get ridiculous, right? It's 3 million. But there's some people that are going to make this kind of money, right? But you have to believe in the project and hold. But then if you do the numbers and you kind of figure out the math, then all of a sudden it doesn't become so scary, and you got a hedge, because the APY rewards are absolutely ridiculous. Absolutely ridiculous. I couldn't believe it. I had to double check, triple check, and I'm receiving the rewards. And I'm like, wow. The tokenomics are off the charts. So let me know how you found today's video. Like, subscribe, hit the bell notification, take my free Elliott Wave and Fibonacci masterclass, get into my private Telegram group. We're doing some amazing things there. I appreciate everyone there. I think we're coming up to 100 people in the private Telegram group. It's a great, vibrant community, great questions. We're doing workshops, we're doing bonus things. I'm giving different updates and private videos that no one else gets to see, and then premier access to this kind of content. But how did you find today? We covered, how to read the charts like a pro. So the kind of psychology, but you need to see the bigger picture, right? So prepare for pullbacks. If you're gonna extra, you're gonna buy more. If you're gonna take profits, that's all okay. It's all okay, but you have to make your own decisions, and you have to live with those decisions, right? Good or bad, you're in charge of your profit. You're in charge of your losses, no matter what anyone else says, because it's yours, right? Then we looked at price projections, like the next wave, $1.17 to $1.70 within probably the next few weeks. Yeah, and we need to take that into context as well. And then the creme de la creme, APY, staking rewards. If you do the business numbers, objective, non-emotional, just plug it. I'll probably clean this spreadsheet up a little bit. I was kind of racing, trying to get it done before this video. I just wanted to get the raw numbers, but I'll clean it up so it makes it a bit more easy and more intuitive to kind of look at the numbers. But hopefully you saw the power of getting those staked rewards, adding them to your account, or you could take those staked rewards and sell them and de-risk. You can say your part of your business plan could be, I hold 100% of my tokens, but I sell 100% of my staking rewards, right? And if you do the math, you go, well, if it works out to be roughly 100% in a month, then you de-risk yourself after the first month, give or take, right? So you just do the math. That's the main thing. And then you have a plan it ahead of time, and don't get caught out. Don't believe the hype. Fear of missing out. There's going to be panic buying. There's going to be all kinds of FOMO, fear, uncertainty, and doubt. As much as possible, keep it objective, mechanical. Plan it in advance. Put price alerts in play. When it triggers, you should have a note, and it just tells you, right, Jagir, this is what to do. Sell 50%, sell 20%, or buy more at this point. Could be a pullback. Boom, it hits 20 cents. Right, I want to put in another $5,000 worth of tokens. I want to stake them. So you have it in advance. If you're trying to make the decision in the moment when it's hitting all-time highs, you've already lost. You're going to get more gray hairs than me, right? Stress hairs. I call it wisdom. I like to think it's wisdom, right? Too much thinking, right? But for you, whatever level you're at, because a lot of people are new to the game, I'm listening to people and it's doing my head in. I'm like, oh my Lord, these people are not going to be able to sleep at night. So you have to write this down. Please write it down. All right. Now, I think that's enough. That's enough. Let's finish in a quote. What's the quote of the day? Let's see. Let's go for. Yeah, here we go. This is relevant. We're going to rely on Benjamin Franklin today. He who is good for making excuses is seldom good for anything else. If I hear people moaning and groaning, oh man, I try and run a mile. I try to run a mile most of the time, man, because they're gonna moan and groan about everything. And I've seen it. And it does my head in. I'm like, just write down a plan. Just up your skill level. If you don't know what, pancake swap is, just Google it. Watch a YouTube video. We've done YouTube videos. I did a couple of my last YouTube videos. If you don't know what BEP20 and ERC20 is, spend half an hour learning, right? This is your financial health we're talking about. You need to take it seriously, as serious, if not more so, than your physical health. That's why we're doing this, actually, to increase and help increase your financial health by giving you high probability strategies. Elliott wave, fundamentals, business plans, just tokenomics, staking. Let's take all of the information and make objective decisions. Oh, there you have it. Like, subscribe, hit the bell notification. Thank you. 5,000 subscribers. Appreciate you. It's been an amazing journey so far. Never done YouTube before. It's only been, I guess we're in month 6 months, almost 6 months to the day. 6 months to the day, or 6 months, 2 days ago. And we got to 5,000. That's it's crazy. But appreciate you. Take the free Elliott Wave and Fibonacci masterclass. It's a really good masterclass. And you get the opportunity to buy my discounted courses, and it bite-sized chunks everything, and just to learn how to read the market in an objective, non-emotional way. I personally don't watch the news. I just rely on the technicals and the fundamentals, and I get to sleep really well at night. People that watch the news every second, watching the price every second, man, it's stressful. All right. I'll see you very soon.